So we're here with Martin Reeves, head of individual insurance business at Equitable Life. He just did a fantastic presentation, spoke all about Equitable Life. So I wanted to ask a few extra questions while we're here to ask him about where he sees Equitable Life, what differentiates Equitable Life from other insurance companies. Briefly talk about yourself and maybe help answer a few questions with it.
Yeah, thanks for having me. So I've been with Equitable for 3.5 years, 20 years in the industry. I'm an actuary. So in my current role, I lead Equitable's operations, underwriting, product, finance teams for our individual insurance line of business.
Awesome. So yeah, one of the things we were talking about today was the mutual aspect of Equitable Life. Like, why does that matter? Why is it important? How does it impact actually people that hold policies with Equitable Life?
Yeah, absolutely. I think the biggest value is the alignment of interest between the organization and the client. As a mutual organization, we're owned by our policyholders. We have no shareholders. All of our focus, all of our energy as an organization goes into maximizing value for our policyholders. If you think of a pie, there's one less slice of pie that has to be divided between policyholders, expenses, and shareholders, right? And there's no shareholders. So we view it as a great alignment of interest, complete focus on the policyholder, and full effort into maximizing value for our clients.
Yeah, one of the takeaways from the presentation that I got was, when you're in a boardroom and you're having a conversation, it's what's right by the policyholder. There's not a second party there. There's not a shareholder there. There's not that conversation of, well, how can we maximize profits for a shareholder? It's how are we doing what's best for the policyholders, because the policyholders are the shareholders. And I love that interests are aligned with the mutual aspect. And there's not that many mutual companies in Canada. So it makes a ton of sense, especially when we're talking about participating life insurance and that sort of thing. So that's awesome. I mean, you're an actuary.
That's right.
So you see a lot of deal with things like life expectancy and that sort of thing. So I just wanted to ask you about like where you see or how you see life expectancy fitting into the par account. Like, is that a positive thing when it comes to Equitable Life?
Yeah.
If life expectancy increases?
Yeah, I mean, it's a huge topic of discussion. It has been for a long time. Life expectancy has been increasing for close to 100 years. And the question is, where do we go from here? There's always these offsetting kind of factors. We have medical advances, healthy lifestyles acting as a tailwind to life expectancy. And then there are competing things like environmental questions that could potentially go the other way. And the way we think of it is, generally par solutions are great here. If there's improvements in life expectancy, which we expect there will continue to be, all that value goes back to the policyholder in the form of dividends. Right. Par policyholders own the performance of the par account. And as people live longer, they'll pay their premiums longer. Their death benefit will be paid later. They'll earn more investment returns. So all of that is financially beneficial to the par account, and all of that value goes back to the policyholder in the form of dividends. And so, we think it's a big question, but generally the consensus is continued increase in life expectancy, which will be a great thing for our policyholders.
And then one of the things actually from the takeaway from the presentation is you were saying like Equitable Life, as of now anyways, isn't pricing in.
That's right.
So that life expectancy increase, where maybe some companies are. So if life expectancy does increase, that directly benefits the participating policyholders, like you said, as way of a dividend or profit being shared with those individuals. So I thought that was a really nice takeaway from the presentation. One of the things that I got some value from. So I mean, obviously we're talking pretty technically about participating account with Equitable Life and why being mutual is important. One of my other takeaways from the presentation was the aspect of the non-participating piece of the insurance business playing a role in the dividend account with Equitable Life, where maybe that's not the case with other insurance companies.
Yeah, so the profits from our non-par accounts belongs to the par surplus, which is owned by the par policyholders. So we don't distribute that into the actual dividends, but what we're able to do is take all that profit and use it to enhance the services, the value for our clients through whether it's better service, better digital assets. So none of that gets leaked out to a shareholder. All the profit from our non-par accounts is able to create a better, stronger organization that creates better value, better service to our clients. So it all belongs ultimately to the policyholders.
Amazing. Yeah, I want to thank you for your time. I mean, it's been really nice getting to know you a bit better. It's nice to know the people on the inside of the insurance company as well, not just the front-facing people. It's nice to talk to actuaries where they see the industry going and where they see especially specifically for our purposes, the participating accounts. So it's been great getting to know you and chatting with you more. And we thank you for this time.
Well, thanks very much. Pleasure speaking with you. Yeah, appreciate it.
Yeah.